The JSE requires a free float of 10%. You could argue at various levels we have that free float, because if we don't have that free float, we can't remain listed. You get free float and you get free float though. So although there is a component of the market that could turn a seller tomorrow, as a chief executive of a listed company, you would have a fair idea of where those shareholders sit in terms of their own exit strategies. We've got a number of very large shareholders, and about 8 shareholders account for about 90% of the stock, 92% of the stock. Now, some of those 8 actually would constitute the free float. Whereas if you look at the balance, which would include myself and one of my non-executive directors, Anton Pukita, we'd be regarded as the non-public and not part of the free float. And that's going to have an effect either way. We would argue that it's actually had an effect over the last 4 years. Is because of the state of liquidity in the share. If you have too many sellers, supply exceeds demand, share price goes lower. And this is irrespective of the fundamentals. Now, over the longer term, we believe the fundamentals have got to support the technicals or all the supply-demand statistics on the stock. So the two ultimately have got to marry over time. They don't always marry at a point in time. And that's where there is opportunity to make money, is where the fundamentals don't match the technicals. So if there's an oversupply of shares, but the fundamentals are good, well, then you could have substantial returns. If it's the reverse, the fundamentals are poor, and demand exceeds supply, then you've got too high a share price. So I think thrown into the whole basket for a potential investor are all these aspects to making an investment decision involving a huge group. But at a business level, we believe we've got to a stage where this most recent year's performance is testimony to where we're headed.